And so for those that are out there that don't know what technicals are, or not used to looking at technical analysis, I mean, basically, it's pretty simple. I mean, you're dealing with just the study of price movement, with volume, with sentiment, with trading flows. It has very little to do with the underlying fundamentals of the issuer. So I don't look at the balance sheets. I don't care about earnings. Really, I don't care necessarily about what the Federal Reserve has to say, except to how that influences price. And if something should affect price and it doesn't, then I think that's obviously important. But, throughout the years, I basically concentrate on lots of different charting patterns. I look at sentiment. I look at seasonality, really a lot of time-based studies, but it all comes down to price action. And I think when investors truly start to look at price action, it helps to take the blindfold off. It really helps people to understand why news oftentimes does not matter with underlying stocks. And it really is all about price action. So if you can blend a combination of technicals along with fundamentals, really it helps you to make your job that much easier. So for example, we look at the S&P and we see that over the last few months, I mean, people don't really know what to make of it these days. I mean, a lot of the uncertainty about the Federal Reserve and their end game for how they're going to begin tapering, or the inflation uncertainty or peak earnings, I mean, none of that really has caused any sort of decline in price. Prices have been in an uptrend. And if you look at technicals and you use time, you see that each one of these lows over the last 4 months has occurred at exactly 32 calendar days. So we've seen lows on the 18th or 19th of every day of every month going back since the month of May. And so now we've turned down again on time. And in my view, we should actually create yet another trading low sometime in the next week that should lead back to new all-time high territory. So to really be bearish, to be negative on the stock market, one would need to see at least a breakdown of August lows at a minimum. And so that would take a move down under really 43.68. And so until that happens, trends are positive, and one has to use this uncertainty as a way to really buy dips and think that markets can still push higher into late September, even October, before we see any real drawdown. Is all involved with pattern analysis. I look at different indicators and I utilize a lot of sentiment, seasonality, and different relative time frames, looking at how interest rates move. How is that related to the stock market? How do those revolve around the US dollar and what that's doing? Those are all extremely important, and they're really all tied together in how assets move. Sentiment is also a very key part of the puzzle, because many people will look at what the Fed is saying, and really what's more important is to see how individuals think about the stock market. Are we going to be up or down in the next 6 months? Recently, you've seen that sentiment has actually gotten a lot more subdued. It's not nearly as positive as we were last year. Right around this time last year, the market peaked right around the same time, September the 2nd, and sentiment was actually a lot more optimistic. These days, we see the highest level of neutral sentiment that we've seen in over 1 month's time. When you look at things like fear and greed, we're also showing levels of fear right now, even though indices are within 2% of all-time highs. So that's really interesting to me. It's fascinating because markets have held up, but yet we have this environment where people are pretty negative on what's happening, where they're really uncertain as to whether the market can go higher or lower. So for me, I have to use that as being a positive from a contrarian standpoint until we see some evidence. Now let's look at our first meme stock. Here's GameStop. So we see the stock is really just a shell of what it was earlier this year. And we saw all that volatility, huge volatility on the upside and on the downside. More recently, it's moved in a lot of different trading spikes. It spiked up into March, it spiked up into June, and recently we've been consolidating a little bit. Now, the pattern to me is still, you can make the case that the stock still can go up to 240, or above that, potentially it would get it up to 330. Now, I'm not certain that happens, but I do see the potential for a bit more strength in the next 4 to 6 trading days. And for stops, one should always use stops, particularly in a stock that's as volatile as this. So I would use 178 and think that really any move under that level should start to cause this to start to turn down. Other stocks like AMC, you can see that, we're in a much more robust uptrend over the last couple months. We've moved from 30 up to over $50. So it has gotten how we say in technical analysis land, a little bit overbought, but yet still no evidence of this really fading. And so I can still see 55, 56. That's a big area for me. And if we see a move down under 48, that would certainly change the picture heading into October. And I would think that would be a little bit more of a negative. Many more people are embracing technical analysis, and they're using it among many different types of things. It's not just looking at fundamentals. And then when the price goes down, you're scratching your head saying, well, why is the price going down when this company has great earnings? Technicals are very important, and one should continue to try to utilize that and really complement any sort of fundamental picture along with technical analysis. Here's a chart of Apple. So this is really interesting because this stock, of course, is coming out with the new iPhone, huge product announcement. Everybody's, as they say, bulled up for this, but really the stock has already moved about 20% in the last 4 months. So for me, I was on CNBC today and did a piece on Apple, and the stock actually is not that attractive to how I view things these days. I actually think the stock has a good chance of pulling back into October, even in November. I don't like the fact that breadth has started to really wane on this. And if you can see that the stock has really had a very good history of holding right near the highs and bottoming near former lows. And so until we see evidence of this, this channel being broken, it's really going to be right to still put faith in this. The monthly chart, though, shows a reason for concern. The stock is up not only 20% in the last 4 months, but it's also up over 320% just since January of 2019. So it's had a huge run off the lows. Now you're seeing evidence of momentum really not catching up. So as stocks move higher, momentum is not doing the same thing as the stock price. That's normally a warning sign that the stock really needs to consolidate. Initially, I would look at 144 underneath that 130. If we take that out, then it's likely the stock can start to turn down, not only over the next couple months, but potentially into next year. So it's a little bit of a concern. One has to keep close stops, and it's always right to protect your profits if a stock starts to turn lower. The combination of this being overbought combined with regulatory concerns on Apple lead me to believe it's a much different stock than what people have invested in recent years. Bitcoin, what do we think about crypto? Well, interestingly enough, we recently saw signs of this peaking out a few weeks ago, and this peaked out right near 53,000 and started to turn lower. So, I've been involved with cryptocurrencies for years, and there was evidence of it peaking out earlier this year. For those that have an interest in why it should have peaked out, I'm happy to show you those cycles. You need to simply come by my website at newtonadvisor.com. We had some signs that it could bottom from a cyclical perspective back in July, and now we're starting to peak out again. So what's interesting is that, regardless of these institutions going headfirst into crypto, there's no saying that it has to go up. Everybody that's familiar with these knows they're extraordinarily volatile. The past couple of times we've seen RSI, or relative strength index, in the 90s, like we did back in February, March of this year, back in late 2017, also in 2014, we've fallen about 80% from peak to trough. So it's very possible we could actually sell off, particularly if the stock market turns down next month. And it would be difficult, I think, for Bitcoin to hold up while stock prices are falling. So I'm a little bit more skeptical that we can move up right away. I think we need to see further consolidation. I'm happy to buy Bitcoin on further pullbacks, but I don't see it as being a great risk reward just yet.